All right, hello and welcome back, everyone, to the Financial Summit YouTube channel. We have our weekly show with Mark Wood. Decided to skip the daily high with Matt McGregor, but he's joining us right now to give his take on what's going on in the markets. Is he in any trades? Just a quick 5-10 minutes with Matt, and then we're gonna do the show with Mark. Today's going to be a very interesting show with this pullback raging on. Is it something to be concerned about? Is it just a buy the dip situation? We're going to go into all the charts. How you guys doing this morning?
Great. Fantastic.
Yeah, me too,
All
mate.
right. All right, Matt, it's getting late there in Japan. This show usually lasts an hour, sometimes even 2 hours. Why don't you give us your take? I am not concerned, but I am not buying into this dip yet. I think it has a little more dipping to do. What do you think?
Yep, I couldn't agree more, brother. So let me crack on. I'm going to leave you to figureheads to figure this out for me while I sit downstairs and have a beer. But while I'm loading the charts right now, are my charts on screen, Tone Vase?
Not yet.
Have they
Yeah,
have they loaded up? They're there now.
there it is. Nope, now it's there.
I'm concerned how long that took. But all right, look, we're looking at the daily time frame right now, and we're having a fantastic bounce as we speak. A fantastic bounce as we speak, which is throwing everything I was going to say out of the water. But the fact is, like, we had a great MRI. Well, obviously, we had a great breakout of the Lucid SAR. We've had a great breakout of that downwards channel. All systems go as far as I'm concerned. But I did think that there is a great possibility for a pullback, but I'm viewing any pullback as a buy the dip. But as Tone said, where is the place to buy the dip? Well, you could get really lucky, and that could be the bottom of the dip right now at 66,666. That could have been it. But that's a really hard target just to pick. You have to be really lucky to have caught that if that was to be it. Otherwise, I'd be looking for something more substantial. I was really thinking that a pullback down either to retest the breakout point down here, which we had here at a 65, 66, something in that zone there, I thought was very, very viable. And then if that was to fail, I'd be just starting to look for the moving average as it came down a bit lower. Am I cutting out time? Just let me know because
A little
my
bit, yeah,
cursor is moving quite slowly.
a little
Am
bit.
I
Hang out a little bit.
cutting out a little bit? I'm just coming back to you guys now. I've been having internet trouble all night, all night. Don't know why. Have you got me here? Am I loud and clear right now?
Yeah, you're good now. Your camera just cleared up. Yeah.
I'll just say it to you guys. I thought that a pullback was on the cards when we finally broke out, and I view any pullback now as a buy the dip. But I do think that there was a chance that we could get lower. But if I'm wrong about that, I'd be happy to go in higher. I think the breakout is real. I think it's here. I think that there's great upside moving into next month. I'm going to jump off the stream because I'm a burden right now with the internet not being great. Yes, I'm still in that trade from 60,000. I'm still in all my longs that I've been in all year. So I can't wait to hear what you have to say, Mark and Tone. I'll get out of your hair. I'm sorry about my internet. Have a great night.
All good, man. All good. All right. I'm gonna try my charts, and we will see. 1 second. How are my charts, Mark?
Yep. I see. You're good.
All right. And okay, now they came up on YouTube. Okay, perfect. So I am still bullish. I agree with Matt. This is a legit breakout. This is what we were waiting for. We have established a higher swing high. We had a close higher than the closes back in July. We had a nice candle. There's probably nice volume in this candle. I know it doesn't look like much, but this candle gave us higher volume. Then we do go all the way back to August, but keep in mind, volume has overall been declining. And one of the reasons why volume has been declining is because more and more Bitcoin are being sucked in to the Bitcoin ETF. We are almost at 1 million Bitcoin in American ETFs alone. If you go with all the international ETFs, there is more than 1 million Bitcoin already locked up in ETFs and similar vehicles. I am curious what the numbers are for Monday, probably minus a few thousand, but not much. Wow, Monday came in. I find that number very hard to believe. Monday comes in as another 4,000 plus. That's surprising because Monday was a serious down day. Look at this. Monday is a serious down day, and yet the ETFs have purchased Bitcoin. I didn't see that coming. Did you, Mark?
I didn't see it coming, but I did see that there are around 4,000 something purchased on Monday.
Right. And that's probably because Saturday and Sunday, the price of Bitcoin did go up. It did go down Sunday, but it closed Sunday lower than Friday open. I am a bit surprised. I mean, these numbers could also be on a delay. These ETFs are still buying Bitcoin in order to make up for all the, mismatches they had last week. So I do expect these ETFs to have a negative number today. So it's always tricky. Like, is this really in real time or is this like a 2-day delayed number? You see that some ETFs sold, but BlackRock, wow, BlackRock continues to absolutely dominate. Now, probably by end of this week, they're going to have 400,000 Bitcoin if the price recovers, which it actually may not. All right, I'm going to go quick through the rest of my charts here. My view is that this is going to be a legit 1 to 4 candle correction on the daily scale. The correction began a day late, so I am still looking for a buy the dip inside this box. This box has a low end of 64,500 and a high end of 65,500. We hit a low of 66,500 earlier this morning. I don't think this drop is over. I would love to see a clean pullback. This would be a clean pullback right into this 20 period daily moving average. We have the 50 period, we have the 128 day, and the 200 is actually above a few of them. We still need a few moving average crossovers here, like the 50 and the 128 need to get above the 200. And the more Bitcoin consolidates here without, this is a tricky statement. Let's see what Mark thinks about it. I want to see a massive Bitcoin consolidation. I'm going to draw a couple of things here real quick. Where is that like wavy kind of line thingy? I don't know where they are. I've drawn them before, probably here. Yeah, this. So what I want to see is, I want to see a consolidation like this. It can go higher, it can, something like that for as long as it takes, and then the eventual breakout. However, in the middle of this consolidation, I would really like to also see one swing capitulation dip that goes no lower than 64,000. Does that make sense, Mark?
Yep, it sure does. And it's funny, just you have your levels marked off. 64,500 is an area I have kind of set aside as a dip, and also an area that I'd like to see hold as support. It doesn't completely destroy things if it's lost. It just means it's going to get a little bit deeper decline, kind of into this broadening wedge pattern structure, which I continue to watch. It's getting so ripe and so clean. But yes, I agree with you. And it's kind of similar to what time frame are you on the daily?
On the daily, and one more thing, I would love to see that dip take place sometime at the very end of October. so that it also touches the 50 period moving average. I think touching the 128 moving average is a little bit too dippy for me. I would like to see us uh, hold the 50 and touch the 50 and then touch the 128 on a pullback from say 78,000 down to 72, 71. So that's when I want to see us touch the 128, like sometime early next year or something, or late in December. But as far as touching the 50, I would like to see us touch the 50, but I also don't want to see us go below 64. And that happy medium should take place around November 1st.
You know, I'll show you what I'm looking at in a few minutes. But
Okay, so let me finish this off then. And here it is on a daily chart. On a daily chart, I'm gonna extend this range here. I think we can meander here a little bit. This is a 4-hour chart. MRI is still loading, and we top on an MRI top. And I would love to get an MRI buy situation. We have reset the MRI, so I think starting tomorrow we're gonna get one more dip here. And real quick, I want to see how the traditional markets are doing this morning. Gold continues to rally. Let's talk a little bit about gold. I think a top is coming in gold very, very soon. Here's our S&P. Our S&P, this is the 5-minute chart. Let's go to the daily. Wow, the S&P had a huge drop down today. Did we have some kind of economic news this morning?
just I'm curious to click on the DXY right now just to see if
We
that.
did not. Oh yeah, I'll open DXY in a minute. So here's our daily S&P. Our daily S&P also topped on an MRI top on Friday. So once again, a dip was very expected. Where am I looking for the S&P dip? A 1 to 4 candle correction into the moving average, maybe as low as the prior swing high. Actually, I'm just going to move these arrows over, right? I thought there would be a correction from here. Now there's going to be a correction. Oops. And now there's just going to be a correction from here. So this is my new correction path. Something like this. Hopefully it's 1 to 4 days. But if it's longer than 4 days, then I'm looking for a full-blown MRI buy somewhere in the 5,750 range near the top of the prior swing high. We also have the election coming up, Mark. We got to talk about that.
Well, yeah. In fact, you have that dip. You just drew that path right there on the S&P, and going back to prior streams when we kind of took a look at the S&P trends, I said, pay attention to the end of October because that is usually the place to buy the S&P. You're going to get a dip into the election. Usually it's not super powerful, but it's just a dip, and get ready for the price to move up. And so we're kind of seeing that play out perfectly right now, getting a little bit of a top towards the end of October. And my philosophy is kind of like be entered by October 31st into the first week of November and let it ride, see what happens. So it's kind of playing out perfectly so far based on historical trends.
Yeah, okay. And real quick on the dollar. I've been pretty wrong about the dollar. I thought the dollar would be a lot more bullish by now, but there was a big but coming. If Trump wins, I think the dollar explodes to the upside. And the reason is, and this is why the Europeans, the entire half continent of Europe, are having panic attacks that if Trump wins, America is going to tell Europe that they need to deal with their own problems. And the problems of Europe, you can see them from the moon. And if Trump tells the Europeans to deal with their own problems, including the Russia problem, Europe will completely implode. I mean, this is another reason why Trump is not being allowed to win the election, because Europe is in deep trouble, and maybe even Canada. And I think the euro falls apart under the Trump presidency, and that drastically improves America's standing. Like the dollar will skyrocket to the upside and strengthen, and that would um, significantly lower the inflation in the US if the dollar is super strong. Now, it'll kind of suck for US industries, but there aren't that many US industries. I mean, what do we really export? Oil and social media? Elon's doing a couple of things, but other than that, what are we really selling besides Netflix and social media accounts? And people aren't going to give those up. So there you go.
Well, it does look like DXY is having a bit of a rally, which I do think that right now that is having a bit of an impact on the S&P and even Bitcoin. It's not a super strong inverse correlation right now, but
hard to make that argument when gold's still popping.
Right. I'm just talking about specifically the S&P, not gold. Gold is bullish AF, as they say.
Yeah, that's true.
As is silver.
It's about to end, though. It's about to end. Like this samurai top that's coming up is no joke.
Yeah, actually, I have a look at gold. We'll take a look. There's a key Fibonacci that I see it trending into that might create some turbulence and find a drop. And I'm still going to hold true to my theory, just after studying the relationship of Bitcoin and gold, that when gold tops from this parabolic move, and I'm not talking about cycle tops, I'm just talking about a nice cool off where we're going to see maybe 3-4 weeks of corrections. I think that is going to help Bitcoin propel itself out of this consolidation, and that's when I would expect to see Bitcoin pushing above $70,000. We'll see if that holds true, but here's another way to put it. As long as gold is trending strong, like it is, I'm not anticipating super strength in Bitcoin above 70K. I'm kind of anticipating more consolidation.
And S&P is reversing to the downside here at 10 a.m. The high comes in at the 10:05 candle. I wouldn't touch it right now because I would have rather watched S&P go down into 10 a.m. and then I would be absolutely buying the 10 a.m. reversal. But it crashed and then rallied into 10 a.m. and now I'm not sure. I would rather wait. I would rather go long if it breaks the prior swing high, or short if it breaks this candle's low. So this would be my little. We can revisit this at the end of the podcast. So what I would do is I would have this bend here, and I would be going long at the break of the top of the channel on a 5-minute chart, and short if it breaks the bottom. Now on the top side, I just need a break of the candle body. On the downside, I'm going to want to see a break of the wick. And if this wick is shorter than the current wick, I would raise this bar to the prior candle's wick. So that's how I would take my 10 a.m. trade today. It's not always the reversal. Sometimes it's a continuation, but it's usually the reversal. But either way, there needs to be some form of a reversal happening. All right, Mark, I'm going to get off screen share here. I'm going to hand it off to you, and let's go.
Okay. Let me.
Oh, shout out to Viva Bitcoin for this awesome t-shirt that I got at the last Unconfiscatable.
So remind me to go back to gold at some point, because we can kind of compare what gold is doing to what Bitcoin might do out of this pattern here. So I have this on the 2-day chart right now, and it's amazing how clean. So I added this top trend line yesterday because of what happened, but I'm going to delete it right now. As you can see, I have these touches here. This top trend line is kind of the tone base rule of touches, where I'm going to try to connect as many wicks and as I possibly can without breaking through body. So I could adjust this lower, and it's beautiful. It's 1 touch, 2 touch, 3.
Why lower? I would adjust it higher. I would adjust it to the top of
I,
that
I am,
candle.
yeah, I'm going to do that. I just erased the top, but I'm just showing this because this is what happens. I saw on Twitter yesterday, and even you and Matt have said this is a legit breakout, which it is, but I'm not buying it yet, and I'll show you why. But here's the point: 1 touch, 2 touch, 3 touch, 4 touch, 5, 6, perfect. This is getting so ripe and so mature. It is possible in this broadening wedge pattern to have one more partial decline that could actually cut even deeper than what we're anticipating. If this move at the end of September that spiked up to 66K had actually run up here to 69K and then turned around right here and found this low at 59K, that would have been an ideal, perfect partial decline. And I think the price would have smashed through this, but it's just continuing to mature. But yes, so now this is what I'm going to do. I'm going to make this trend line as conservative as I possibly can. Now,
Right. I would actually lower the number 1 significantly.
Lower it. You mean
Yep.
this?
Yep.
Yeah, that's fine. So we still got a fair number of touches here. This is what's fascinating to me, though, Tone. As you can see, so now we've got the price completely rejected in 2 key areas of resistance that once the price bops above, turns around, comes back, and tests 70K, 69K, that is when I would anticipate some like a massive steam.
Oh yeah, that's coming. That's coming.
But look, so you can see right here, I've got this vertical marked off going all the way back to the 2021 prior all-time high. After all of this time, it is still resistance. And now this was the perfect storm for a rejection as the price was moving up into the descending trend line and that prior all-time high support. So I was questioning whether the price was going to push through there, especially on a MRI top on the daily, right? So to see the price reverse from here, I am not at all surprised. But the question is, where is the dip going to go? So let me show you what I'm looking on that. Being said, real quick, I still hold that the measured move of just simply the wedge, forget about this cup and handle we've talked about, is around $94,000. And gold destroyed this target coming out of a very, very similar pattern. And I still believe gold is leading Bitcoin. I believe it's telling us what Bitcoin is going to do, hopefully early in 2025, after the election. But we still have to navigate through this. And so what you were saying, Tone, and I do kind of agree with this, is the more time the price spends bubbling in here into the election. Here's the election, the green vertical. I don't know if I have it on the exact date because I have it on the 2-day chart, but basically first week of November. And then we see a move, a push above 70K, 69, 70K in November. I would anticipate seeing what is normally expected out of November, which I don't remember what the statistics are, but it's typically one of the most extremely bullish months coming in a halving year / election year. So this is now the 5-day closed yesterday. And I mean, you don't have to know too much about candle structure, and maybe the 5-day isn't relevant, but I actually love the 4-day and the 5-day, and that's a top right there. And in fact, in my opinion, even swinging below the swing low of this candle, which has happened already, it's going to put an immediate target on the 8 EMA to me, which, lo and behold, sits at 64.5K. That's the exact price range that Tone had mentioned. So this is in play. Now, this moving average is going to rise. This is a brand new candle. The candle that closed yesterday was a warning, a top warning. I can get rid of this now. And you know, you could get a little bit more conservative and say, okay, if a 5-day candle closes below the swing low of 66.5, well, then that certainly increases the probability of a short-term a correction down to the short-term moving average. But even swinging below it, now there is, if the price is bullish, if we are incredibly bullish, then this is the dip right here. Okay, this is the 3 EMA. It could be either the 3 or the 5. This is what I would consider to be the shallowest potential dip off of this move. Maybe some sideways like we're talking about, and then a try higher. But if I go onto the daily chart, I'll show another look at why I'm kind of considering 64.5, because we have a correction. I don't need that. I need this. Okay. So now I'm just going to put on, this is my elementary basic look that I love. Just 2 moving averages in Bollinger Band. So we had the run to the top. We had a top. The price is trying very hard, very, very strongly to hold this moving average here, which is the same moving average I'm expecting the 5-day chart to correct to, which is the 8 EMA. And we've got 9 hours, and we'll see if the day closes below this 67.1. One close below isn't a big deal. 2 or 3 closes below is going to put a much higher probability on trending down into this 60 to the middle band. So this is what I would like to see, Tone. Coming off of this low on October 10th at 59K, I would like to see something similar as the low off of 52.5K, which was a move back towards the top, a drop with the moving average of the middle Bollinger Band cradling the price, and then pushing it back up. So to replicate that, we would see this nice move off the bottom, reversing down into the middle band, which is going to be rising. Currently, it's at 64.8. Wicking below it is fine, which would then start to target the upper band for a legit try at 70K. Okay, so let me ask you this, Tone. How concerned are you if this area of around 64K, 64.5K we're talking about gets pushed below?
I'm concerned if we stay below that area for over 24 hours, I get very concerned, right? If we go below 64K, it needs to stay there less than 2 hours. If we go below 64.5K, we need to stay there less than 6 hours. If we go below 65K, we need to stay there less than 24 hours. With every additional hour we stay below 64K, I get more and more concerned. So if we spend 24 hours below 64K, I will be expecting 61.
Okay, so here are my layers of support.
Basically, treat if you go to that wick candle, can you zoom in a little bit so you see candles yeah, and then zoom in, yeah, because we don't, yeah, right there. So if you go to the candle on the 10th of October,
in the 10th, right here.
right. So put your cursor on the close of that candle. Okay, so that close is above 60,000.
Yeah.
Now, where was the low?
The low was 59.
58
58.
something, right? So here's what I mean. We spent less than 2 hours below 59, and we spent less than 24 hours below 60. I'm treating 64 the same way. As long as it's something like that candle, we're okay. But if let's say that, but if you had half a day to decide to buy Bitcoin below 59, it's probably going lower.
So it is possible, as we are talking about these prices, you know, we're looking for this correction to dig a little deeper. It's possible to base right off of this 67 price range for 1, 2, 3 more candles, and then reverse the MRI back to the upside.
It's possible, but I would, if I was a betting man, I think we have a nut. I think we have a lower low in us, but I still think we're gonna hold 64.
So you're talking about a nice dip with a strong drop down and then showing a lot of buying pressure, like this candle we're looking at on October 10th. So I could buy, see this area of horizontal support right here-ish. Let's just put it at around 63.2 right here, which we can see the 55 EMA is climbing into that. I could buy a quick dip down to there, but would still want the price back up here.
Right. And it's really hard to explain this concept, right? What you have to think about is you can't just think about a single candle. If you look at the candle, put your cursor on the December or October 10th candle, and then everyone sees the candle that followed the October 10th candle, right? Like if you know, decided to cook dinner right at the low, you literally miss the entire move, and the next thing you know, you're waiting to buy 59, and the next thing you know, Bitcoin is at 64K. Okay, now, um, now go to the prior dip.
This the big
No,
one.
not that one. No, not that one. This one, right? Notice how this dip looks very different than the dip on October 10th. This dip on October 1st and 2nd, uh, yep, on a 2nd and 3rd. On October 2nd and 3rd, you had two doji candles. And those two doji candles, and look at the lows, look at how it all bunches up, right? Now, I felt that that low is unlikely to get breached to the downside. I was almost right. We breached it by a little bit. But um, this low was a lot more breachable to the downside because you had 3 freaking days to buy the low. Markets are not this accommodating. You don't get 3 days to buy the low, and hence there was a higher probability that this low would be breached and people would be punished because they had 3 days to decide if they want to buy the low. You didn't get 3 days to decide to buy the low. You had about 3 hours. That's what happened on the 10th. So the more the candle that ends this dip, and I have no idea if the candle that ended this dip has already happened, but I'm gonna take the under on that it didn't happen, right? But the candle that ends a dip, any dip, needs to look more like the candle of October 10th than the candles, plural, of October 3rd and 4th.
So let me ask you this. What if this current candle on the daily chart closes very similar to this right here? Very similar to how it looks right now. It's above the moving average. It's a green body. It's a bit of a doji. And now we're starting to get something that looks similar to this bottom forming right here.
Here's what we would need. We would need tomorrow's candle, maybe tomorrow plus Thursday, to close higher than the swing high.
Higher than this swing high of this candle.
No, the swing high.
Oh, the swing high.
Yes. We need, because that did not happen back on October 6th, 7th, right? We started to move in that direction on October 7th, but we got rejected. So again, if you have way too much time to make the decision to buy the dip, the aftermath of you having too much time needs to be so violent to the upside that the guy that didn't get the hint that they had 3 days to buy the dip now has to consider buying not just the all-time high, but an all-time high on a gap to a higher all-time high on a gap to a higher all-time high, right? Like remember, you got to think of it from the perspective, what is the most punishing thing the market can do to me, right? And considering that we are already in that zone of having way too much time to buy this perfect dip in the last 24 hours, that tomorrow's candle needs to be so violent to the upside that the guys that missed it have to make tough decisions.
Yeah, I agree with that. That makes a lot of sense to me. So let's take a look.
And if we don't get a new all-time high, not all-time high, if we don't get a new high, if we don't get any closes in the 70s by the end of this week, I think it's likely we're going to have a lower low, but I still think 64 will hold. 64, 64 and a half, whatever, floats your boat.
So let's talk about a couple of just bullish structural things. This last weekly candle closed the weekly, the 2-week, and the 3-week. I was watching all three. So what we got on the 3-week, this candle right here, was a nice bullish close, a very strong close, which was the highest close in history. Okay, there's been 3 fairly strong 3-week candles closing during all this consolidation. This one was the strongest, and it closed almost right on the prior all-time high of 2021. So the pressure cooker is getting ready to boil over, and just might need a little bit more time under this resistance that we're talking about. I was watching the 2-week. It almost got a high close as well, but it was basically the exact same close as with this very first pop up to 70K in late February. But still, it was a very, very strong 2-week and 3-week close. And let me go to Consensio real quick, because here's something interesting we got on the weekly close. And we'll talk about Consensio in a minute. We have the MACD crossed for the first time since losing the bullish structure in late April. Okay, the last time the MACD crossed out of a massive a consolidation range was right here in mid to late October, which is the period of history we've been kind of perceiving this to be very similar to. With this one, this is the weekly chart. We have these 2 very strong weeks right here. Currently, we have 1 very strong week, but it is enough to flip the MACD green. How bullish does that make you for the longer term, let's call it the intermediate term? Not this week. Just let's call it 4 to 6 weeks out.
Well, it makes me very bullish, but you got to flip the narrative here, right? Because I'm super bullish on the price action, that's why the MACD flipped. Like I'm not bullish on the price action because the MACD flipped, right? Because of the structure of those candles. I'm super bullish, so I'm not surprised the MACD flipped.
Okay, and then here is our Consensio 4-day, 5-day versus weekly arguments. Now, Consensio weekly, you're not in this market. You are on the sidelines. You are in cash. You are not entered. In order to enter, let me zoom in here. In order to enter, you would need the blue moving average, which is my 10, 3, 10, and 30. The blue moving average crossed back above the black, and we can see the black is still trending down. That is going to have to flatten and curl up. So Consensio would probably not have you entering until I would say a minimum of 3 or 4 more weeks. Right here in that consolidation in October, we got the signal from Consensio on around let's just call it October 30th at a closing price of 35K. Whereas if we look at the 4-day, 4-day has all the parameters in to have you at least 25% into the market. This last candle curled the black moving average. It's very subtle. It's very, very subtle, but black moving average is clearly trending to the upside, right? So maybe you could have front run this entering at around 66K, which what was the price that you entered, Tone, on your leverage?
I got in at let me check exactly for you. It was I don't have that up anymore. It wasn't that that's a day, that's a 4-day chart. No, it was below 66. I think it was like 65 something. Let me see. I'm gonna open it up.
You
It is in the future. I have the futures chart, so it's a little bit different. But I do have it marked on the futures chart. That is a weekly. It needs to be a daily. It was 60, just above, a smidge above 65, like 65.1.
as this candle was trending up, you kind of front ran this.
Correct. Yes.
And so this is suggesting that the price is the structure is okay down to 61.5K. I really don't want to see it dropping that low. I would prefer a dip somewhere in the blue moving average range, which is going to be trending up to that 64.5, 65K range on closes. In fact, this current candle closes today. So these moving averages will adjust on the close, and this will probably climb up closer to 64K. Perfect dip to buy in that range. So, and then the 5-day chart is not quite, is set up right, except for the moving average is flat. So 4-day gave you a slightly earlier signal, but they're both kind of agreeing, and they're both giving us signals before the weekly that I would tend to trust. So this is why I'm still going to hold. I understand Socrates' argument about the volume on the weekends and this and that, but the moving average structure is what it is. And I used to use 3-day. 3-day is, in theory, might have gotten you in even a little bit lower, but as you can see, it's risky because maybe you were entering at around, well, ideally 3-day still would not have you entering until around 64, about 64K. So 3-day, 4-day, 5-day gives us a nice generalized view. Okay. Do you have any opinions or thoughts on now? And let me real quick, the 2-week chart.
Not really.
Okay. The 2-week
I like this chart. I really like whatever you just pulled up. The 2-week looks great. Can you throw the MRI on that? I want to see what a green star is, if it has one. I think the green star was there on current candle for like a minute, unless it showed up on last candle.
Here it is.
It looks like you don't have the star structure up, but that's okay. I can see it. Yeah, the green star would have been on last candle. It's okay. You don't need to.
Yeah.
The green star would have been on that last candle. I am very bullish here.
Yes, that's this mega bullish structure. The price is above all moving averages. Got the black moving average screaming to the upside. All it's going to take is 1 or 2 closes above all of this mess, all of the 2021 mess above these closes, above these wicks up here around 73K. And this also does suggest, it tells us very clearly that 54K is the base. Below that, silent night. I mean, this black moving average is the most conservative I would call it like final boss support. But Consensio is looking good. Real quick, let's just take a look at my mega bullish post-election ideas. This is what Bitcoin does after every election. And when I zoom in, I was taking a look at this the other day. It was back in 2012. I'll zoom in to show this, but as we can see, the price generally trends up into the election. This started in 2016. It started trending up right around August, September, and end of the summer, and it just slowly drifted into the election, and then it took off in 2020, about the same thing around September. It was sideways. It was sideways, but it was slowly drifting, and it had a nice bullish pop right before the election. So
I know, like when I see a chart like this zoomed out, I'm like, man, what could have been if China didn't ban mining in like the summer of 21?
exactly. So this was the 2012 was the only election that actually saw the price dropping into it. But again, going with our philosophy of buy the dips in October and early November, if you had bought this dip at $9 into the election, and all we saw from there after that was basically green, all the way up to $260. So there's not a lot of history to go on. We only have not even a handful of elections. But what we're seeing right now is what I would be expecting to see. And then the most bullish thing is just my black arrows that just show the general direction post-election, which is up only, especially, let's call it like the first 2 months, about the first month or two after the election, the price has done nothing but go up in every election. Okay. So Tone, that sets things up for what you and I discussed earlier of, hey, okay, maybe we do get a dip to 64K, 63K, 65K. If that times into the election and gives us a nice, stable, higher low, I would anticipate to see the price pushing above all of this mess within a couple of weeks after the election. Would you agree with that?
Yeah, absolutely. I am looking for that big move. Would be nice if it reaches the top of your arrow. Could be a little optimistic, but yeah.
That top is about there's some technical targets in that range. My more conservative still remains around 155K. But now really quick, I'm going to put a Fibonacci and have this discussion about gold. I'm going to put a Fibonacci right here on.
Yeah, I have the 1.6 Fibonacci at 102.3.
Yeah, that is my first major target once 70K is support. There are other targets in the 80Ks. There are some other Fibonacci's in there, but we can put an always never statement to this, which is Bitcoin has always trended to the 1.618 after breaching the prior all-time high, like flipping it to not just touching it, but flipping it to support. And in fact, the price typically blasts through there, reverses and corrects down to it. So I actually am seeing the 1.618 as a potential dip. So here's a Fibonacci extension just from the top of this broadening wedge pattern, and I do have it down to the wicks. I I could argue, kind of go with Fibonacci, Fiboswani's ideas of this is where, excluding this wick all the way down to 50K, 49K, a lot of emotional price action has taken place right here in the 54K range. It doesn't change it too much. Let's keep it conservative. Gold currently is trending to the 2.618. And I'll take a look at that. I have this pulled up. I have this pulled up here somewhere. The 2.618 is currently sitting at 105K, which is lining up with the 1.618 coming from the ultimate top to the ultimate bottom. So there's a lot of confluence in this low 100K range. But basically, what I'm trying to say is this: where gold is right now, coming out of a very similar consolidation structure, is sitting right where Bitcoin would be if it was at 104K. And I'll find that chart in a second. Let's just go through these really quickly. Look at Nvidia. It has taken out the swing high of that potential disastrous monthly topping candle. So that is void. It's holding this phase 4.5 trend line, which is now in ludicrous mode. And 9 days closing on a new all-time high and a new monthly closing high. Like, it's bullish, right?
Oh yeah, I've been very bullish on Nvidia the last few videos we've done.
And Tone, this is a green star candle.
I know. No, Nvidia looks like a monster. I mean, I think it's going way higher. I think I said on my last stream, I think Nvidia can double from here.
Yeah, I had a couple price targets.
But from here was in the beginning of this candle, right? So when I said Nvidia could double, we're doubling from like 120, not from, that's when I said it, not from 140. Big difference there.
Big difference, yeah. And again, it is just running through all kinds of it's running through all kinds of Fibonacci extensions. This is
Because there are, I mean, there are reasons for Nvidia to double, and they have to do with government interference.
So it is currently pushing above the 5.618 extension, which would Bitcoin replicating the same move would actually be pushing Bitcoin above $300,000 right now.
I mean, look, Bitcoin is not going to be underperforming Nvidia for much longer. I mean, Bitcoin is going to overtake Nvidia. Well, like Nvidia has outperformed Bitcoin over the last like what, 10 years? Not 10 years, but I forgot that there are these charts that show how Nvidia has outperformed Bitcoin. That can't go on for much longer. By end of 2025, Bitcoin will overtake Nvidia. I mean, I don't know if that means Nvidia is going to crash and Bitcoin is going to stay up, or Bitcoin is going to rally to a quarter mil. But Nvidia can't compete with Bitcoin. They just can't.
Well, hold on, we can look right here. I think I might have that chart somewhere. Let me see. Why can't I get
Again,
that?
it's like expecting a shitcoin to flip Bitcoin. It's just never going to happen. Nvidia is never going to flip Bitcoin for a long. I mean, it's been flipping Bitcoin for the last 3 years, and that's going to end.
Here's so Nvidia is one of very, 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 very few assets, global assets, that has been in an uptrend versus Bitcoin since 2021, and it's been a massive uptrend. Like if I put
No, but Mark, go back to the beginning of the range.
beginning of where?
Go to the front, right? Well, like the first candle, right? But again, why are you using you gotta use the index, man. You have to use the index.
Let me see. I don't
You
know
can't use an exchange.
I don't know how to pull the index up versus Nvidia.
No, go to the ticker. Go change the ticker. Crypto cap. No, don't do that. Instead of crypto cap, make it BTC USD and choose the index. No, you add Nvidia. Put Nvidia. Actually, it should be Bitcoin divided by Nvidia. It would be better, but it's okay. BTC USD index.
Index.
Oh no, up. Third one down. Index, yes.
Is that it?
Yeah, that's it.
Let me see. It doesn't look like it's pulling it up. Index.
It is. Just click enter. Yeah.
There you go. Okay.
There. Okay, now go to the beginning. Okay. Now, there you go. Now you have a whole history, right? So it's been outperforming Bitcoin. Yeah, it's done super well against Bitcoin, right? It's kept up with Bitcoin since basically 2014.
Yeah, it has. And since Bitcoin topped in 2021, Nvidia has outperformed it significantly. But here's the crazy thing is, going back to the early days, let's go back. Let's try to be fair to Nvidia. Let's go back to the 2017 top, like the 20.
No, it's 2017 bottom. Oh no, 2017 Bitcoin top. Yes.
Yeah. So it is still minus 40% versus Bitcoin, even after an extended 3-year uptrend. So you're right. I mean, you are right. Eventually, this uptrend is going to end. But look at this move off of 2021 lows, 900%, almost.
Right. I think the most fair measure would be off the COVID lows because everything crashed in COVID. It wasn't specific to any asset, right? Everything crashed in COVID. It's a brand new slate. So now we're looking at March 2020.
Yeah, I got it about right here. That's February, March. There it is right there.
March 20th, 2020. That's when everything crashed. And from that moment of March 21, everything reset, everything crashed. And from that moment on, Nvidia has done way better than Bitcoin. So Nvidia has gotten better off the crash of 2020 because that's a slate clean. Like if you don't want to cherry pick this asset's at the high, this asset's at the low, mining ban, whatever, right? Everything crashed in COVID, slates reset. Nvidia has been crushing it. Bitcoin's gonna overtake that.
Totally agree. So here we are on my post-halving outlook. We're 140 days, 184 days post-halving. Timing a top, just general average moves, timing a top still in September 2025. I have the top here at 156,000, which is a Fibonacci extension. I think it might be the 2.618. And now, according to history, this is about the period where you would expect to start to see Bitcoin move. It would be interesting to put the elections on here as verticals. I might add that. But consolidation, dips, a better way to put it is lows should be in, significant lows should be in, consolidation period should be almost over, and we're ready to see the price roll. Here is our basic investor mode. HA 4-day and 5-day are now agreeing, similar to Consensio. I love when those two systems are in agreement, and they're basically saying you want to have some skin in the game at this point. With the moving averages crossed and the candles green, this gave you an entry at around $65,000, which is right when Tone Vays made his move. And then let's see. Okay, here is my bull chart. This is the 3-week, 55% green 55 EMA crossed above the green 55 SMA. And at this point, we want to see yellow holding, which if we go back to 2021 off of the 65K top, 1, 2, 3, 4 tests of the yellow with 0 closes below. Similar. Price definitely came down to these 2 candles. And this is exactly what I want to see. This is the exact price action that needed to happen. Not only that I wanted to happen, that absolutely needed to happen, because according to historical trends, once this yellow 21 begins to get closed above, the bull market is over. So I was watching 50,000, and now this moving average, wow, it's trending fast. This moving average has gone from 50K to 55K in just a matter of a few candles. So at this point in the bull run, I want to see the orange 8 EMA being support. And we can see that all through 2017, 2016, 2017. Any bounces and touches off of that were buying opportunities.
So
And
can you zoom in so we can see what the price of that is?
yeah, I'm going to do that right now. I was about to say, lo and behold, the price of that is right at $64,000, which is the price.
Well, how much time in the 3-week candle left?
This was a brand new candle, 19 days.
Okay, so we got time. Okay.
19 days. This will continue to rise.
So this is the election candle.
Mm-hmm. With this bullish cross right here, which was very early on in both 2020 and particularly in 2016. There was this nice consolidation in 2016 at the prior all-time high, a nice dip, a strong drop, and we're getting we got the exact same price action here. We got to the prior all-time high, the moving average is crossed, a nice strong dip, and now the price is back above all moving averages. They're perfectly structured. Exactly what we want to see. Now, if I put the 3 EMA back on here, I have a feeling that might be what is suspending the price right now. Let's see. Yeah. Moving average magic. Okay. So very bullish as long as the price is holding closes above the 3 or the 5 EMA. I've got it set to 3. So that is currently at $66,500. So any dips down to 64K, I would still like to see 3-week candles trying to continue to close above this short-term moving average. So nothing significantly bearish to talk about there. And here is MSR. I have identified, based on the 4-hour chart, a dip structure where I would like to see the price held. And once again, we're just getting so much confluence. We're getting so much.
What does that half round thing? Did you draw that, or is that part of the indicator?
Oh, I drew that. I just
Okay.
made that as I'm looking at this moving average right here, which we do have a bearish cross of the 55 EMA pulled down below the 55 SMA. So I am not at all surprised to see the price lingering in this $67,000 range. There's been a nice bounce off of this, but as we can see, the price is bouncing into moving average crosses and moving average resistance. In order for me to believe that this is it for the dip currently, not to say that the daily still can't turn around and drop lower, I would need at minimum 4-hour closes back above 68K. Right now, the price is stuck in a range of support and resistance, basically floating between 67K. I'm sorry, 67K and 68K. So the range is tightening. But the reason I have this pink shaded area is because this dark blue moving average is the 377 EMA. Typically, we want to see that holding. We can see that it was lost back in early October, and the price dipped down to the 200 SMA. But now the 200 SMA is crossed above it. So we really do not want to see the price pushing too much farther below the 377. And on the indicator, this green dotted area right here is called the marker. It's support. That is currently sitting at $63,484. So much confluence. Tone and I have looked at about 4 different things, different time frames, different indicators, different ideas, highlighting this area of 64K as an area that we would like to see being kind of like the final dip zone if the daily does continue to dig deeper. The thing is, 4-hour is in a fresh bullish trend, which suggests that anything down to the beach is, especially down to the marker here, it should become fairly low risk to consider buying dips. And the one, this is the 128 and the 200. Those are all, so here is an area of really strong support when I zoom in. The 128, the 200 EMA, and the 200 SMA, they're all postured at $64,000, and we'll be kind of jockeying from there. So I can take a look at this on the daily and see if the daily agrees. Yep, I like. So the white moving average here, I've got a lot of moving averages on here, but the white moving average right here at $63,329 is the 200 simple moving average. And we've got several bullish crosses now. Currently, we are about to get the 55 EMA crossed back above, which should, in theory, get this area at 63.2 established as firm support. Let's do a quick experiment. I'm going to turn everything off, and I'm just going to look at when the last time the 55 crossed the 200. That's all we need to take a look at. That would have taken place. Oh, wow. Look at this, Tone. That would have taken place, not surprisingly, right after the consolidation at the end of October. We got the 55 crossing back above the 200 on daily. And I'm not sure what moving average this was walking the price up. But so this does suggest that the lows are in, the consolidation lows are in, and 64K is going to be a nice base. We are going to get a little bit concerned if we do see the price being pushed below there. Any thoughts on this particular moving average? Check this out, Tom. Look how powerful this moving average cross is. Here it is coming out of COVID, right here in early May. The price basically based off of that moving average for several months and then finally propelled. Here it is getting the price moving out of the lows, the 28K lows, pushing the price up to 69K. But we can see what happens once after this move, once the 200 is lost. It's not good. And right here, here's one more moving average cross that was mega bullish coming out of January at 20K, giving us the perfect dip buying opportunity we talked about, buying the 200 SMA. So this TA suggests strongly that any dips between current price and 63K, based on the election, based on cycles, based on everything else we've looked at, should be a dip buying opportunity, not financial advice. Thoughts on that, Tone?
Looks good. No, don't really have anything else to add. I mean, that moving average does cross over every now and then.
Yeah, it's not like a
I'm just not a fan of like because it had this minor dip. in 23, and it like went wacky during COVID, and then like like of all the things I would be looking at, this is probably not it.
It's not a major one for me. However, like this was this was the signal in 2015 coming out of the bear
I
market.
know, but these signals seems to come after a failed signal, and I don't like that.
It does, and there was a failed signal right here as well. Well, but that's
Right. It's just like signals tend to come after failed signals, and it's just not something I would depend on, right? So eventually it's gonna have a double fail.
so that's my point though. My point is that it's pretty clear. Like for instance, here's let's go to this failed signal because I still believe there's a very small remote possibility, very small remote possibility that something, some kind of election fuckery, some kind of a fabricated black swan event.
Oh, we actually we already know what it's gonna be. In my off-topic group chat, someone just posted. So there's gonna be a massive uh cyber attack military exercise on the election day.
Yeah, let's say that
Like
they
involving NORAD, like they're actually doing a massive cyber military exercise the week of the election. Of course they would. Why wouldn't they?
why wouldn't they? Of course. So
Why wouldn't they do that? I mean, like, why not?
so to Tone's point, and this is always something to consider when you get some major moving averages crossing. This bullish cross took place literally at the high, literally in February 2020 at $10,500. That was it. And the price dropped back below the 200 simple moving average. The 55 rolled over. It was tested. It was tested right here in early March at around $9,000, resisted, and price capitulated. That was kind of like that was the warning sign. And I was what, $8,500.
Hey Mark, let's move on to more interesting charts. The one you had after this is way more interesting, and also the Ichimoku Cloud. I mean, they're just way more interesting. I think we've talked enough about moving averages for the day.
Got you. I got you. So in order to avoid 2019, we just need the 200 simple basically holding, and we want to see this holding a support right here. So once again, 64K is key. Really quick, just wanted to show this. We had a very small, very small minor capitulation. However, a nice buy signal was printed on around the 14th of the 15th of October, right here, right around the 60K range. So this isn't anything I put a lot of heavy weight on, but we did want to see this flip back to a buy signal after this small minor capitulation. I'm seeing that as bullish. This is something really important. This might be the most important chart I have. This bottom oscillator is showing us it's a look back period of looking back. I believe I have it set to 18 periods. So I'm on a two-week chart going back 18 candles, 18 periods. The amount of time that the Bollinger Bands were this tight is virtually zero. And we can see the last time we got this signal, lo and behold, was also coming out of the October capitulation. So sometimes what I will do, just to kind of give a visual, is I will just run a percentage. So right here in early October, the bands were squeezed to where they were 36% apart from each other, bottom to top. So they look to me to be even closer together than they were then. Now, what did that do? What is this oscillator telling us? It is telling us that outside of the bands is a major move, a massive move, minimum of 40%. It could be 100% move on a time frame this high. And what was the signal to get bullish? It was with the oscillator trending towards zero. and a close above the top band, which took place in late October, right here at a price of $35,000 within 1, 2, 3, 4, 5 candles. The price was at $50,000. So, and eventually went to $70,000. If we see the oscillator finally starting to show a top, this was a 100% move given by this signal. So to look for a move to 140K, 150K, once the price is breaking $73,000, not at all remotely shocking or surprising. In fact, I would be expecting that. That being said, well, let me do this really quick. Let's see how far apart the bands are right now. Last one was 35%. This was even tighter.
Plus,
25%,
less.
which suggests
25?
25%. Yeah, bottom to top. It suggests
Yeah, and I think it'll get tighter into next week.
they're
Though
going to
though because this candle is gonna end before the election. I just don't see a move before the election. I think it's gonna be consolidation into the election. So when next candle shows up, that move could be 20%. The difference could be 20% with next candle.
which will be maybe the tightest squeeze in history. I have to go back and look. Now,
Well, that's the other thing I was gonna ask you for. Can you zoom this out a little bit?
yeah,
And then slide it, like zoom it out so we can see the oscillator as well. Can you like double click on the chart?
yeah, hold on. Let me hold on. I'm just going to get rid of the moving averages so that we can just
Yeah, get rid of the moving averages, not necessary.
see now. This
Now, double click so that we can see the oscillator.
oh yeah. Real quick, Tone, before I do that, the pink is the median, which is sitting at
Okay.
4.8. So once again, we're getting a real clear look at $65,000. I don't really want to see the price closing back below there. But let's zoom out throughout history and see if the
Yeah, zoom out and then not zoom out. Don't zoom out that much. Oh, actually, no, it's fine. So what are those red? Oh, red bands are the opposite. Also, we've never actually had those blue spikes until recently.
until recently. Yeah. And so this is basically the second well, here, right here, here was a squeeze in late February. There was a squeeze that led to this actually did not produce very much. It actually just reversed the oscillator to build up even more.
Can you make this a 1 week chart?
1 week, yeah. So
Zoom out.
the 1 week gave us a nice dip right here in the end of June. And all that it is suggesting, this is just suggesting volatility. It can't really tell us direction. We have to use other oscillators and tools to understand direction. It's just telling us, hey, things are about to get a little bit volatile. Same low reading right here at the end of July, which led to the price. It's hard to see from here, but it led from the price dropping from $28,000 to 24, and then blasting from 24 to 35. So all especially on the weekly, the higher the time frame, the more reliable the signal and the stronger the move that we will get out of that, if that makes sense.
You try now. Can we go the other way? 3 week and monthly?
3 week is getting in.
Yeah, so monthly won't give us anything. Okay, that's fine.
The 3 week is trending into a low seen in June of 2020, with the price also in consolidation mode right here at the top band. And here was the signal right there, October 5th, close above the top band with the band squeezed and off the price went. That move basically took the price from $12,000 to $42,000 before a major correction, but really took it to 65. So even on the 3-week chart, this is suggesting massive spike above 80K. The 2-week chart, the reason I like the 2-week chart is because this price range of $72,400 is lining up really close with what I'm looking at on the 2-month chart, 72,141. I'm looking for that first close above out of the bear market, which has come so close but still hasn't happened. So this is agreeing just with our long-term outlook that anytime, we talked about this on the last screen, Tony. If October, by some chance, closes the month above $72,000, November is insane. We will see a candle something like this. We will see a candle maybe something like this or this or this back here in 2017. But we might not. Let me ask you. Let's just do a quick probability. Give me your probability that October closes above 72.1 currently.
I'm actually under 50% for the close of October, above that high, because I'm still expecting a pullback into that $66,000 zone, and then I'm expecting a little pullback up, and then the low coming in at the end of October. So I think we're gonna consolidate with a slight bearish bias until election. I have a slight bearish bias with consolidation, and all that because we didn't break out, right? Because this week started off weak. If this week started off strong, today's Tuesday, we're still pulling back. I just don't see it, right? Like I can see a push to the upside the week of the election, like Friday, Monday, but I think because of so much uncertainty going into the election, and when there's uncertainty, we've talked about this before. When there is uncertainty, people sell risky assets and they go into cash. And this election will have the most uncertainty. It's irrelevant that some polls say that Trump has a 80 to 20 lead on Kamala, and other polls say that Kamala is 50-50 and she can win, because we all know, even if the entire world and every American believes that there's an 85% chance that Trump's going to win, in reality, there's still less than a 50% chance that Trump's going to win. We saw it last election, right? So there's just this massive uncertainty. I think people are going to go into cash. I'm not rushing in. I'm back to a 60% bullish allocation. I know my Consensio is calling for 100% bullish allocation, but we have the election coming, and the only way I'm going fully long is with a close above 70. And I don't think we're going to close above 70 at the end of October. We may close at 85,000 on November 7th, but I don't think we're going to close above 70 on well, whatever that Friday is, right? So there's a Friday, November 1st. I think Friday, November 1st, we can close below 70, and Friday, November 8th, we can close at $92,000. I think that's very, very possible. But I'm going to take the under on a 72 close or 70 close, whatever you said, at the end of this month.
I am too. Without this dip, I would have been a little bit more bullish. But there are other cycle timing things to consider that are lining up with early November. So I'm with you. I'm at less than 50% that we will see the 2-month closed above that top band. The next 2-month candle, which would be.
And by the way, speaking of betting odds, right? For example, one of my biggest mistakes was not betting on Trump winning in 2016. I remember I was looking at those markets. Hillary was a 7-1 favorite to win that election. So a $1 bet on Trump was winning you $7. And some of the betting sites were I mean, that's basically what the odds were. And I even said, like, it should be 50-50. I don't understand how Hillary's a 7-1% favorite. Now, this time around, according to the betting websites, Trump is like 65, 70% chance of winning. So going into election day, if Trump extends that lead, Trump could be a 5 to 6x favorite over Kamala. And you know what? I would take the opposite bet that I should have taken. I would bet on Kamala. There's no way I would take the odds. I would
Yeah.
take the odds that there's going to be some magic that night, right? I would take the opposite bet of the bet I should have made back in 2016. And because I just don't believe it. I think the election is 50-50. And it doesn't matter if the betting sites have Trump as an overwhelming favorite. It's 50-50, guys.
All right. Well, one more minute on Bitcoin, and then I want to ask you. I want to talk about gold real quick, Tone. So, this is the Ichimoku Cloud indicator on the daily chart, and I just have these blue ellipses here highlighted because I just we've looked in the last several weeks at so many similarities of coming out of this October, summer to October consolidation in 2023. And currently, with some, these are never going to look exactly the same, but so many similarities right now. We've got looking ahead here, we've got the cloud twisted green, and we've got the TK cross set up bullish with the blue above the red. I can zoom in so we can see that a little bit easier right here. That bullish cross took place as far back as late September. And this was dicey. This was very dicey right here. Had with the bullish cross and the cloud not having flipped green yet, had the bottom of the cloud been lost, which was right at this 59K, that would have been bearish. We would have been looking at the price trending back down to 57K, maybe these swing lows, maybe even taking this out. But as it turns out, the bottom of the cloud was the perfect dip area. So looking back at 2021 with the same setup, it took after this one massive candle, it took several candles from October 23rd until November 14th to even test short-term support on this indicator, right? The price just climbed up. There were moving averages, other moving averages that climbed up. So what we would like to see at this point is the Tenkan to be support, which is currently sitting at, lo and behold, $64,000 right here, 64,001, and that will climb. This will begin to climb. But this is a very bullish setup, and we just got a very bullish cross, very, very fresh cross on the 3-day chart. I'll zoom in really quick. I know it's hard to see on the dark screen. So bullish TK right here took place on the 18th of October on the last candle, or maybe 2 candles ago. So looking back at 2023, the last time we saw that with the cloud green, as it is right now, it's remained green. That cross took place in late October 2020, October 22nd, at around $30,000. You even could have entered at $33,000 and you would have been fine. So at this point, this is wanting, these will begin to separate and climb. Let's go back. Let's see if there's another cross in 2020. So here was a failed cross. No, I wouldn't say failed cross, because we actually did get pushed to new highs after the cross.
Yeah, well, I wouldn't call that a failure.
No,
Look,
but
it's so hard. The only failure in late 2021 was literally the price of Bitcoin not going where everyone expected it to go. That was literally to me, TA did not fail on back then. I mean, in hindsight, yeah, there was massive divergence, but there shouldn't have been divergence because the break of the prior all-time high should have taken Bitcoin to at least 85. I mean, that was my target. Like my target wasn't 300 like some people, but my target was in the mid to upper 80s.
Right.
It's
And
very reasonable.
when I say failed, so this still got another 40% rise out of that
Yeah,
signal. But when I
yeah.
say, usually when you get a signal like this on,
Yeah, the cloud never flipped red at any point. It was legit.
it's legit. But the point is, when you get a bullish TK cross on something like the 3-day, for instance, right here, that took place in May 12th, 2020, with the price at $9,800. Let's just call it $10,000. That was a mega bullish sign. It's still clung sideways, but as we can see, the cloud had not yet twisted green. So it when the cloud twisted green, which it currently is, and there was some divergence, that is when the strength took off. So this is suggesting to us what happened, what just happened one candle ago. This is suggesting to us that there is some major upside left. Even just getting the worst case scenario of another 40% move, right? That's going to push Bitcoin close to 100K. That's gonna push it to $95,000. I think this signal is potentially very early, very green, very fresh, and am anticipating something at least like this right here. This move with the cross taking place in the cloud green in 2023. Let's see. That was a, let's just be conservative. Um, that was a 118% move. So just for shits and giggles, let's project that and see where that gets us. 118 just from this top. Um, that brings that's very close to my target, $150,000. That's very close to what I'm still holding as like one of my most conservative, quote, bearish targets. What do you think about that, Tone?
I mean, I try not to put targets that lofty, but look, everything is bullish for me right now across everything. The only thing that's not bullish is just short term, like these next 2 weeks. I did take on that leverage trade. I felt good. I thought it could have gone a little bit higher. Would have been nice. I exited right at the top on Friday, and I'm gonna wait. I'm either gonna buy my dip at 64,000, probably with leverage as well, or I'm gonna wait until the election. But I can see if Kamala wins, we should probably like next. By the way, next show we're only going to talk about the election. Like we're not going to look at moving averages and stuff. We're going to talk about the reaction off of election. And I can see if Kamala wins, Bitcoin crashing for a week. I can see a crash. If Kamala wins, I can see Bitcoin crashing into the 50s, but then recovering quickly. Like I can see a COVID style Bitcoin crash, not as bad, into the 50s. Now, if Trump wins, I expect Bitcoin to go straight up immediately. So it's going to be a huge dynamic. It would be a nice option place. Unfortunately, I don't have options on Bitcoin ETFs yet, and I won't have them for this election. But it's going to be very, very interesting. I would rather be in cash because of the uncertainty going into the election. I can always make my decision after. So I may lower my position significantly in Bitcoin from 60% bullish allocation. I just don't see my allocation changing much away from 60% bullish right now going into the election, unless some drastic moves happen. And but if we are still at current price going into the election, I may reduce that bullish holding to 20%. And the day after the election, if Trump wins, I'm happy to go 200% long. And if Kamala wins, I'm happy to buy the dip because I think if Kamala wins, we're going to get a crash.
I could see that. But again, I would agree. Like it should be a dip opportunity. Um, I just wanted to show this really quick. So I want to talk about gold. I've got a couple questions to ask you. So when I zoom out, I'm on the daily chart right now. So my trend line, I have them drawn differently, but this is gold. This is gold in this massive. I just see, I just see gold so similar to Bitcoin. In fact, the S&P was also basically in the same pattern. It was just like this big rounded bottom, cup and handle, whatever you want to talk about. This handle went on quite a ways, but it's a similar broadening pattern with a little bit more of like a horizontal resistance. But what I did here
Right.
was
So I see that final dip. See that final dip?
right here.
That I can see that happening if Kamala wins.
This is what I was talking about with Bitcoin. This is that final partial decline that kind of digs way deeper into the structure than you would imagine. But look at that V, look at that V recovery, right?
Right. Again, that's my expectation if Kamala wins. If Kamala wins, I think so. Basically, if Kamala wins, that's what I'm expecting. But if Trump wins, then so that's the election dip. If Trump wins, I'm expecting the breakout, like a little more to the right, to the
Yeah,
right,
a
to the
little bit,
right, to the right,
or
to the
even
right, to
this
the right, a little more to the right. There,
right
right.
here.
Yeah. So, no, that, so basically, if Trump wins, the pre-election dip is that little one right before the breakout. The pre-election, that's right now, right? What we're dealing with right now is what I'm expecting if Trump wins. If Kamala wins, then what we're experiencing right now is the July dip. August dip, sorry. August.
This
August. Keep going to the right. Nope, August.
I will. Yeah, I will. But what I'm saying is that here was the run to the top, and then this partial decline that dug deep. It wouldn't happen. It wouldn't take this long to play out.
No,
Um,
no, it would be faster. It would be a lot faster, right? So you can actually make this weekly chart instead. But it will kind of play out like that. But basically what I'm saying is there's two dips. I wish I can like draw on your thing, right? So if you basically if you zoom in a little bit on this area, okay. So the dip we're dealing with right now, if Trump ends up winning the election, I think that the current Bitcoin dip is the February dip.
right here,
Right? Right. And if Kamala wins the election, I think the current dip is the August dip.
right there.
No. August. August. No. To the left.
September,
August.
July.
That. Correct. Yes. Okay. So either way, I think we're going to go up a little bit over the next few weeks. But then if Trump wins, we break out. And if Kamala wins, we dip again.
I see. You're talking about pre-election, and then this happens after the election.
If Kamala wins.
Okay, now I'm tracking. Now I'm tracking with you. So what I wanted to show here was I took a Fibonacci from the top of this wedge pattern down to the lows, and as we can see, gold is trending currently right into the 2.618. It's kind of stuck between the 2.414 and the 2.618. I do think it's going to run up here to 2800. And to put a similar move onto Bitcoin, because I do this pattern that gold is in, it's Bitcoin is in the same damn pattern. It's just lagging. It's just behind. So that same Fibonacci extension from here, let me be conservative and just get these lows and go to the 2.618. That brings that price. Well, this is what we were looking at earlier in the stream tone. This is that $106,000. I believe that gold and the S&P are leading Bitcoin right now. It's lagging behind. It's going to catch up with them, and it's probably going to outpace them. And gold's move out of the wedge breakout pattern is suggesting Bitcoin trend up to $106,000. Do you agree with that or disagree?
I agree. I agree. Either way, it's going there, right? The question is, how quickly after the election does it, start to move?
Yeah. Okay. I don't know if I have too much. What is there something? here we can look at this really quick. The Mare multiples, just to get an idea of where things are in the structure. This is the weekly. These multiple bands are based off of the Black 200 simple moving average. They're all multiple factors of the 200. As we can see, the price has just basically been swimming between the blue and the purple. We looked at something just a few minutes ago suggesting that once above 80,000, which is where the purple is on weekly, could potentially propel the price significantly above 100K. I do think that that is true. When we look back in history, when we look back in 2016 at the bull run, there was an oscillation, a long period of oscillation, basically between the blue and the purple, as exactly what we've been seeing here. And then once this was established, I'm going to zoom in right here. We're looking at this period of coming out of the 2015, because yes, we've been looking at a lot of similarities of the October consolidation from 2023. However, I see so many structural similarities to 2016, 2017 that makes me believe that this could extend the run longer and higher than what we might be anticipating, because this has been building up. It built up out of the bear market. But what I'm wanting to show here is this long oscillation between finally picking up the blue, bouncing up to the purple, not quite holding it. Now it's support. In January 2017, now the purple is support. We got oscillations and then a massive move up. So those price ranges currently, with the current situations, are 80K. So the price has not, the Bitcoin has not been able to establish this multiple off of the 200 as support. What 2016, 2017 suggests is, of course, the market cap was much lighter then, so it's going to be harder to move so quickly between these multiples. But once purple is fully trusted as support, a quick move up to the green, which is going to be rising quickly, which is currently at 112, is not unreasonable. And on weekly, I believe that the red multiple is where we might be watching for a top, as the first initial top in 2021 topped at the orange, and the tops have been stepping down levels. This is going to assume diminishing returns from level to level. So somewhere between the green and the red on the weekly chart is where I'm anticipating a top. If the price begins to push above the red, we will be seeing a change of behavior from the last cycle, meaning that it's going to at least, Tone, you realize that above the red multiple here is $100,000 difference between the next one.
Yeah, I think it'll be very hard to get. I don't think we're ever going to hit the orange, because once we start getting into the green, above the green, the moving average is going to start to rise very quickly. So it's going to be kind of like what happened in 2021, where they start to rise super quickly. I don't think we're making it to the orange. We might break the red at some point, but I don't think we're making it to the orange.
It would be really hard. I agree. The red will be rising, because as soon as the 200
Right.
these are all going to react off of that. So this area is where we'll be watching once $70,000 is breached, to maybe get cautious for a topping area. So Tone, I wanted to show you this tweet and get your opinion on this. Kobisi letter. I like this account. They have some really good market information. So this was posted, I think, yesterday, 21st. Gold's market capitalization has hit a record $18.4 trillion. Since 2019, the market value of gold has officially doubled. This comes as gold prices surpassed 2,500 for the first time in history and are up 33% year to date. By comparison, the market cap of the US stock market is 57 trillion, or 3 times higher. At the same time, Bitcoin's value is 1.4 trillion or 13 times lower. Okay, here are my observations. In order for gold to have doubled in market cap from 2019, it's basically adding $9 trillion to the market cap. That amount of money coming into Bitcoin would rise at $450,000. This is just based on some simple market cap math. So what are your opinions on this? Are we too bullish on Bitcoin, and this is showing us clearly that gold still is the standard where this trusted institutional money goes? Or what's your opinion on this?
I don't think it's institutional money. I think it's national money. I think it's China and Russia and maybe India and Brazil accumulating all the gold that they're mining, getting ready for a new Bretton Woods, a new competitor to Swift. They may or may not make a gold announcement. So this is not speculative flows. I think this is federal flows into gold. Bitcoin is still dealing with speculative flows. If this was speculative flows, there's no way gold would be this high.
I agree with that. And not on this stream, but on the next stream, I'll bring up, I predicted this move in gold in 2020 based on a massive structure repeating. And it's amazing watching it play out. And it begs the question of how do TA structures line up with financial and economical patterns that gets the price moving to technical analysis targets? Do you understand that question? It's kind of complicated.
A little bit. Also, keep in mind, 2019 was it wasn't the low. The low came in very late 2015, but gold was declining from the 2011 top until the low in 2015. But the low in 2019 was pretty damn close to the low in 2015. So we are talking about an 8-year-ish low. Like I said, it wasn't the final low, but comparing like running this from the 2019 low is like running Bitcoin from the post-halving low, basically. It's not the post-halving, the post-COVID low, right? So it is a bit of a cherry-picked low in gold. And you can see it right there, that second low, like coming in 2019. You can see it on your chart, right? So
Right.
I'm not sure why your gold chart only goes back so far. Your gold chart should go back. Oh, there it goes. There it goes. Further. Right. So it is cherry picking a low quite a bit. But again, the doubling of the gold market cap, you got to remember, like we were making fun of Bitcoin, that Bitcoin only 10% of Bitcoin is actual available for trading and price discovery. It's probably less than that for gold. It's probably like 1% of all gold is there for price discovery, and the rest is just sitting there somewhere, right? So gold is even less liquid than Bitcoin by percentage terms.
So there's a simple mathematical formula if you understand Bitcoin's market cap and its current floating supply, which is like 19.7 trillion, where you can basically predict the price of Bitcoin based on the market cap. And to make it super simple, the way that I've kind of explained it to people is for every $1 trillion added to the market cap is going to rise the price of Bitcoin by $50,000. It's actually probably closer to 53,000, but to keep the math simple. So in order for Bitcoin to see a $9 trillion increase in market cap, that would put it at an estimated price of 450, almost $500,000. Like, to me, I believe that Bitcoin will eventually absorb that kind of market cap. I don't know, maybe.
And one more thing, contrary to what the conspiracy theorists would want you to believe, the government is not interested in suppressing your price of gold. That is the biggest bullshit that people like Peter Schiff and all the other gold promoters are telling you, that the government is in the business of suppressing the price of gold. Government couldn't give two shits about the price of gold. In fact, most governments are holding gold somewhere, and most governments have the ability to confiscate the gold that others are holding. So the last thing the government actually cares about is suppressing your price of gold. Bitcoin, on the other hand, is different. Because Bitcoin is an unconfiscatable asset in many ways, and because it is now the darling of the next class of anti-government thinking people, the government is actually in the business in crashing your price of Bitcoin and making fun of it. So and the US government still holds 200,000 Bitcoin. And I heard 60,000 of that is on the chopping block. So yes, if the price of Bitcoin starts to rally big time with the Trump election, I can see during that 2-week lame duck session, the US government thrashing the price of Bitcoin with a market sell of 60,000 Bitcoins.
Okay, real quick, I did find this. Let me just show you what I was looking at. Right here, the black arrow, which was June of 2020. If I put this on a quarterly chart, we can see that it was a massive shooting star. That was the top. I was like, okay, gold is done for a while. I am seeing it in a very similar structure to this. So I projected and predicted that gold was potentially, because we never know, but potentially going to make a very similar move out of this structure. It's amazing watching it repeat. This was a big rounded bottom slash cup and handle, and when I zoom in, we can see it was kind of an ugly ascending triangle. Point is, this was the handle coming out of the cup, and then we had a measured move that took the price to $500, and then the ETFs were launched right around here, and gold saw this 8-year run into this high of $2,000. But what I did, this chart is 4 years old. I have not adjusted it except for I've added some stuff here. I projected what gold price would be trending to if it repeated the same double parabola move, which now when I come into the current price action, we had the cup, and we basically had an inverted head and shoulders slash wedge. We were talking about the wedge. It was just a consolidation at the end of the cup. So now the measured move target off of the cup and handle for gold is 3,081. I do believe the price is going there. The inverse head and shoulders target has already been reached. That was at $2,600. But to project the same move as what gold saw coming out of this same, we got to realize this was from 1997 until 2003.
But and you also have to remember, almost every single 60 to 70-year-old gold promoter happened to get in at that time, right? The Peter Schiffs of the world and the Doug Caseys of the world, and like all your gold is going up forever, it's being suppressed, all of those guys, they bought gold at that time, right? And they straight up got lucky, most of them. It was just that age, right? Like Peter Schiff specifically. Peter Schiff got into gold in 1999. It was dumb luck, because if Peter Schiff got into gold 5 years earlier or 5 years later, it would have been very different.
So this hopefully is a clear visual of my question I posed to you. How is it? So this is a technical setup. This is just a long sweeping pattern, a consolidation, and right here in February, at a price of around $2,100, was the final breakout. So and of course we're seeing Russia and China. Yes, they've been accumulating through this whole period. They've been accumulating since 2019 or earlier. But it's amazing to me how political and global economic events can line up as a perfect storm to help the price moving where the technicals are already having it line up.
Yeah, no, I mean, look, it's happening all the time. It's happening with Bitcoin right now, with its 4-year cycle, with its election cycle, everything. And the TA picture couldn't be more bullish. It's all lining up.
Okay, so we can wrap this up. We've been going 2 hours. I have one more question for you regarding this gold. So what I did is I projected what gold would look like if it repeats the move out of the cup and handle pattern, which is about a 350% move. That actually tracks gold all the way up to $9,000.
I don't see it going that high unless the US dollar collapses, but I'm not expecting it to collapse. Well, I am expecting it to collapse around 2030. So I'm expecting something like that, but it would be exponential on the back end.
So you kind of made an argument as to why it wouldn't happen is because all the 60 somethings and 70 somethings were getting into gold here, way back here. The current, and they were what, in their 20s and 30s back then, right?
30s, 40s, like at an age where you can afford to throw a bunch of money into gold.
So the current 30s and 40s, they're not buying gold right now.
No.
Yeah. So it is going to be much more difficult to draw the market cap needed to rise.
Right. It would happen on the back end with the collapse of the dollar.
So we could do some rough math, basically saying this would basically 3x the price, and what did I say the market cap was? 18 trillion.
18 trillion right now.
So a move like this, or gold eventually getting up here, would be about 54, 55 trillion, which actually is very close to where the S&P market cap is right now. I think it said in that tweet it was at 57.
Yeah, but S&P is going to skyrocket to the upside, right? Again, for the same reason.
Yeah.
And also, so look, my target on gold is 3K.
Okay, yeah.
I don't think gold is reaching 4K. I think before gold breaks 4K, we're going to see 2,000 backtested.
2,000.
Well, 2,000-ish, right? Maybe 22, 23.
Yeah, maybe
so
here, maybe, yeah, 23. I could see that.
I mean, gold might have a blow off top above 3,000, maybe reaching 3,500, but then it's going to have a massive pullback. And if it is going to reach that $5,000, 5,000 and above, it's going to happen after 2028. There's going to be a whole other election for us to discuss.
So I would agree with 3,000. That is the measured move of this cup and handle. That seems kind of baked into the charts. And if it continues to climb up this parabola, which I was kind of surprised. What's interesting is when it broke down from this parabola, oftentimes when you break a long parabola like that, the price is really going to dip. But we can see right up here, the price, this was in April 2023, the price popped back up to the parabola and tested it, and it was resistance one more time, but it created a higher low, and that now it's back inside of the parabola. So anything goes. But I mean, I
was very bearish at those lows in October of 2022, but the MRI buy right there at the low prevented me from being too bearish. So right at the low, what are you looking at? 2 week? I look at 1 week. I stick to the traditional time frames. So literally, there was a MRI buy right there at the low on the weekly. Right there. So other than that MRI buy, I was bearish at that price. It was the MRI buy that made me be a little skeptical on how low it would go. I was looking for a 1 to 4 candle dead cat bounce, and it turned out to be the start of a bull trend, which is fine.
Well, and you know what? It formed a pattern that I've observed to be really, really bullish. This was in essence an inverted head and shoulders, except when you get higher, like the highs on the left side of the shoulder were around $1,900.
Right. Also, look at that. That was also that was an MRI top, and that you just pointed to. They were all MRI tops, actually.
Yeah, right here. But that
No,
top
oh, no, no. A little later, if you zoom in, you'll see the ones and the arrows.
here,
There it is. Yeah.
yeah, and that was at 2,000. So when the right shoulder is higher highs and higher lows, because the lows on the left shoulder were around $1,800. The lows here are 18. That is mega bullish.
And if you zoom in on how this started to go down and move to the left, so you can see the MRIs. Zoom in more so you can see the MRIs. Okay, and now slide it to the right. No, way too zoomed in. Way too zoomed in. You want to see the whole pattern, just so you can see the arrows like that. Yep, perfect.
Okay.
Perfect. And now you can see that. Now slide the whole thing to the right. Slide the whole thing to the right.
Like this.
Keep going. 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 More. There. Right. You see the MRI top. Yep. Into the MRI low. Into the MRI high. And this was absolutely perfect. And now if you slide it the other way, that top wasn't perfect, but then the low came in perfect, then the next top came in perfect.
Yes, big shooting star candle here.
Right, there was an MRI warning candle, but it wasn't as great as the rest.
Right.
And then, so the MRI did a really good job on a weekly, which is why I think we're topping next week on gold.
So let's take a look at the weekly really quick. Yeah, it's on an MRI warning right now.
Right, and it's a second consecutive, which almost never happens. I think gold's going to go down.
Yeah, that would be going back to the very beginning of the stream. That's what I've been waiting for. I've been waiting for DXY to show some weakness and gold to just top in USD, but not collapse, just top, leading to this is on weekly chart. So we would expect, maybe 2, 3, 4 weeks of everything is lined up for Bitcoin to break out of this in early November. We just have to be patient and then see what happens with the election.
Right.
It's some kind of crazy thing.
All right, Mark, we've gone 2 hours. I got to steal the screen share for a minute.
Go for it.
Because we do have to wrap it up. I just want to make one quick comment in that earlier when I mentioned that if Trump wins, he's going to cut Europe loose. And someone commented, but if they cut Europe loose, Europe sells U.S. government bonds. And that was a very good point because my current economic hobby the last few months has been keeping track of how much government bonds are held by foreign nations. And the latest data is out on a monthly scale. I don't put data into the spreadsheet on a monthly scale, but I do update the year-end figure as of the latest numbers. And I sent a screenshot to Mark. The latest numbers were absolutely fascinating. So here's the latest data. And when you look at the latest data, I hated that this is completely misaligned. So this is the latest figure from August. And sometimes it's the number is right there, like in the case of Japan. And sometimes the number is over here, like in the case of China. So it's not like aligned, which is super annoying. I don't know why a government website can't like give you, why can't they make columns properly? But I digress. So once again, Luxembourg is a menace. Look at no, I'm sorry, not Luxembourg this time. Luxembourg's been a menace all year. Luxembourg has not increased, but look at the Cayman Islands. The Cayman Islands had a massive increase. Look at the increases in U.S. government bonds held by the Cayman Islands. The Cayman Islands increased by $60 billion, holding them from June until wait, where's the Cayman? There. No, not from June. Sorry. Yeah, no, this one is misaligned. So from June, that's the June number, not the May number. From June, they go from 320 billion straight to 380, and now they've gone up again by another $40 billion. The Cayman Islands are now holding $420 billion in bonds, which they've now topped how much Luxembourg is holding. So I put all of these numbers into the spreadsheet, you can see Japan went up a bit. China keeps going down and down and down. China is dropping. UK goes up. And this is telling me which countries are following US and which countries are not. The Taiwan and Hong Kong continue to buy more bonds. US bonds shows you the control that America has over Taiwan and Hong Kong. China continues to deleverage their bond holdings. Luxembourg is the biggest holder of US government bonds in the EU. Germany is not budging. Germany has a very low holding of US government bonds. Ireland has slightly lowered their bond holdings, but I think this number will still be green by the end of the year. I'm finding this data completely fascinating. I can't wait to do a year-end review of which countries are holding how much US debt. The Cayman Islands is absolute insanity with their 7 billion in GDP holding 420 billion in bonds. I mean, look at Japan, the biggest US single country bondholder. Yes, they're holding $1 trillion worth of bonds, but their GDP is $4 trillion. And compare that to the Cayman Islands, or Luxembourg for that matter, with their 86 billion in GDP holding 400 billion in bonds. And not all European countries are that high. So what happens? We will see, right? Like who's going to buy U.S. government bonds? It'll be very interesting if Trump does come in and he cuts Europe loose. What does Europe do with the U.S. government bonds? You can see the blue line is the cumulative holdings of the European Union of U.S. government debt. And then this dark line is Japan here. And this red line is China. And then this green line that's rising, that is, I believe that's the Caribbean. And this darker green is the UK, or the other way around. Sorry. This might be the UK. And this line, this darker green is the Caribbean islands. So I think the Caribbean islands are going to skyrocket to the upside. If this blue line starts to go down, it will all be money laundered through the Caribbean islands. I'm pretty sure. Let me double check here. This is just about 500, and this is over 600. So let's see the UK. Yeah, the UK is at 744, and the Caribbean islands are cumulatively at 510. Yes. So I should probably change the colors on those. Yeah, so that the green lines are, I think this green line of the Caribbean islands is going to surpass whatever that other red line is. This is Asia and Australia. Let's see their holdings. Asia and Australia. I think I have them max stuck together. Yeah, Singapore is the big holder here. They're at 572 cumulatively. Singapore is the big holder of that, with South Korea a close second. I don't know anyone that's covering this data. I don't really know how to take this to its final conclusion, but this data is absolutely awesome. I'll throw the link in the video description. If you have something interesting with this data, or you think of something cool to do with that data, let me know.
Yeah, I think that's a Lynn Alden question.
Mm-hmm.
You know, really quick, you and I talked about the interest rates or the yields, the 10-year and the 2-year still just kind of floating in a range, and they're both rising again. They're moving up. There's no, the rate cut that happened really didn't do too much of anything. And again, before we go, rate cut before the end of the year, yes or no?
I don't know. Well, before the end of the year, there are two more. There's two more meetings. I don't understand how there's a 90% expectation that Jerome Powell is going to cut the rate the day after Trump shows up in office. I mean, maybe maybe he's doing it to keep his job. I don't know, right? Like he lowered the rate to help the Democrats, and if Trump wins, he's lowering the rate to help the Republicans, and if Kamala wins, he's lowering the rate to remain at his job. I mean, I think this is 100% political move. And I just don't understand why the rate needs to be lowered. The stocks are an all-time high. So why? Why are they firing their, help the economy revive bullets when the economy falters? Why are they doing that now when the stock market is at a new all-time high? I don't understand. But I tell you what, if there is a 90% expectation that the rate's going to be lowered and the rate is not lowered, expect a massive crash that day.
Yeah, I can see that. All right, that's about all that I have, Tone.
All right, now that's all I got as well. And we're going to take a peek at the price of Bitcoin right now before we close out. I just don't see myself even considering buying Bitcoin until either we get a 4-hour MRI buy, and we don't get those very often lately, right? I have to go all the way back. This is a 4-hour chart. I got to go all the way back to mid-September, more than a month ago, to get a 4-hour MRI buy. That is very surprising for me because we get like 6 of these candles a day. And I have to go over a month back, 5 weeks back. So I think we're due. I would love to see a big drop here over the next 3 days. Give me a 4-hour MRI buy alongside a proper 4-day correction, a little rally, maybe even a capitulation to scare people. So I'm not in a rush. Consensio is 100% bullish. I'm back to a 60% long position. I may even lower my long position here. I want to buy the dip or buy the breakout.
Yeah, no, the 67K area of support is key, and I think if we get some 4-hour closes below that, we'll see a little bit more bearish price action.
Yeah, this to me is a pretty bearish looking move. Yes, I know we're getting some wicks on the low side, but we keep getting lower closes. So, wicks at the bottom is good. Continuous lower closes are bad. Moving averages are about to cross. We just got a red star candle. We're coming off a 4-hour MRI top that timed the top absolutely perfectly. It was extension B at the high on the warning candle. All signs pointed to a top right here. The S&P is on an MRI top itself, coming off. I've been saying it for weeks now, not weeks, but sorry, days. This is a daily MRI top. I've been saying, watch out for the S&P to pull back. Gold is at an MRI top. All speculative markets are toppy right now. I think that people are going to raise cash into the election. Too much uncertainty. Who knows who else is going to get arrested? Who else is going to get shot at? The internet going down because of their test on election day. I think it's going to be absolute pandemonium here. So I think the best move is to hold cash for the next 2 weeks going into the election. And yeah, that's about it.
Yep, I like it. I like it. A couple of I'd say 4, 5, 6 hours closing below 67K probably takes out those current swing lows, and we'll get a little bit larger correction going.
And Mark, we're doing one thing before we come off the stream. I haven't opened my. I'm still looking for the poker card, the 1 of 21 card, or another rare tone vase card. I think I only have 1 or 2 of them. They're 1 of 100. I'm opening one of my unconfiscatable packs. Maybe your good luck. Let's see. Let's see what we got. We got the halving card. I'm already remembering some of these. I haven't opened packs in forever. We got Samson Mao. We got Lisa. Oh, I don't remember this card. Cool. The executive order. Wow, I don't know if I recall this card. And here we go. Adam Back. That's a pretty good card, actually. It's 1 of 250. So that's a more rare card than a Jimmy Song, a Nico, or a Natalie Burnell. So, Mark, thanks so much. We got a slightly better card than usual. on this. Here are the rest of the cards. Check out Bitcoin trading cards. Some of my cards from Series 1 are going for like $3,000-$4,000. I only have one of those. And thank you all so much. And Tone Vase from Unconfiscatable is going for 5K. Happy to sell you mine. No, I already have one of those. But I do want the poker card. That's probably more. That's more rare. I should have made them a little bit different, but that's okay. All right. Thank you all for watching, guys, and I will see you all tomorrow morning with Matt McGregor. Thanks for the show, Mark.
Later all.